Despite minimal vehicle sales, Rivian stock has stormed out of the gates, garnering a huge valuation of nearly $100 billion and helping position Rivian to disrupt the sports utility transportation industry. In this video, we look at Rivian's history, its fundamentals, and determine whether or not Rivian stock is a good long-term investment. You can jump straight to the stock analysis and my year-end price target with the timestamps in the description below. Let's get started. Rivian is an American electric vehicle and energy storage company that was founded in 2009 by Chief Executive Officer R.J. Scaringe under the original name Mainstream Motors. Scaringe, a graduate from MIT with a doctorate in mechanical engineering, would change the company name to Rivian in 2011, a name derived from the Indian River upon which Scaringe had spent time as a child. As a CEO, he is flanked by Chief Operating Officer Rod Copes, a graduate of MIT and former president of Royal Enfield North American and former vice president of global sales at Harley-Davidson. Rivian was started with a small team of hand-picked engineers and designers with the intention of electrifying trucks and SUVs and the mission of developing vehicles and technology to inspire people to get out and explore the world. Today, Rivian has more than 8,000 employees, is headquartered in Irvine, California, and operates its main manufacturing plant out of Normal, Illinois. Rivian's first production vehicles and their two flagship products are the R1T, a 2-row, 5-passenger fully electric pickup truck, and the R1S, a 3-row, 7-passenger SUV. Both vehicles are built on the R1 platform, designed for high performance on both on and off-road, and capable of being adapted to a wide variety of vehicle use cases per Rivian's IPO disclosure. Production is done in-house at the Normal facility and is vertically integrated down to the battery pack. The R1T has an EPA range of 314 miles, a 0 to 60 of around 3 seconds, and a towing capacity of 11,000 pounds. As of recent release, it's received praise from notable reviewers such as Doug DeMuro and Motor Trend. It is designed as an off-road adventure vehicle and has been praised for its off-road ability, comfort, and speed due to its 4-motor, 800 horsepower powertrain. The R1T is no doubt an impressive showing from Rivian, but scaling manufacturing and dropping the initial starting price of $68,000 will be key. Rivian plans to launch the R1S in Q2 of 2022. Built on the same R1 platform and powertrain, it shares many similar features of the R1T, suffering slightly in towing capacity due to the full-size SUV form factor. Both vehicles offer Wi-Fi and cellular connectivity, 120-volt outlets, an air compressor, adjustable ground clearance, and purchasable accessories such as camp kitchens and vehicle top tents in an aim to further entice outdoor-oriented consumers. Rivian is also building a commercial-oriented electric vehicle platform focused on cost efficiency and large-scale mass production. Scaringe has partnered with Amazon to develop the EDV, or Electric Delivery Van platform, and has reached an agreement with Amazon to provide them 100,000 EDVs by 2025. Intention is to deliver the first 10 of the vehicles by end of this year. This is a key partnership for Rivian, as they gain a foothold in the last-mile delivery use case, with one of the largest delivery fleets in the world. In being an adventure EV company, Rivian is developing its vehicle charging network to target both high-throughput areas as well as more remote off-road destinations. They intend to deploy 3,500 DC fast chargers at 600 sites and 10,000 Rivian waypoints at participating retailers by end of 2023, both of which are to be capable of being open to third-party customers for potential profit. Rivian also claims to be making strides in commercial fleet software, energy storage, and insurance, and hopes to be able to open a collection of experience spaces to promote community interaction and nature preservation. Rivian has favorable winds behind their back. They are set to benefit greatly from pro-EV federal legislation, most notably the recently signed infrastructure bill and the currently proposed Build Back Better bill. Furthermore, Rivian has a key connection with Amazon. Being its largest shareholder, it's clear that Amazon is relying on Rivian to get a piece of the growing EV market, and it would be difficult to see Rivian fail from a lack of financing, at least in the short term. So is Rivian stock worth investing in? Rivian has yet to post any revenue, as the delivery of the launch edition R1T began in Q4 of 2021. They continue to lose money as they ramp up production. Loss from operations increased from $409 million to $1 billion from 2019 to 2020, and is on pace for nearly $1.9 billion in 2021. That said, a significant portion of that is going directly into research and development of their manufacturing capacity in Normal, Illinois. As of June 2021, Rivian holds total assets of nearly $6.5 billion, with cash and cash equivalents at $3.6 billion and existing liabilities of $972 million. That would be concerning if not for the fact that Rivian is expected to post an additional $12 billion in cash on hand as a result of the wildly successful IPO it went through in November of 2021. The company should have ample liquidity and opportunity to spin up manufacturing and grow aggressively. So is it worth buying at current valuations? Rivian currently trades at a market cap of around $100 billion and a price of $120 per share, hitting a high of $172 shortly after the IPO. It will have to grow aggressively to justify such valuation. Rivian pre-orders have grown to over 58,000, with expectations to deliver 20,000 vehicles in 2021 and doubling that in 2022. If Rivian is to meet its promise of delivering Amazon's 100,000 vehicles by end of 2025, the vast majority of deliveries will likely be lower margin EDV vehicles. This is also likely why the expected delivery date for many customers is pushed out as far as 2023. The facility at Normal, Illinois has a stated production capacity of 150,000 annual units. Rivian will have to expand to additional facilities to meet expected growth rate, and I would not be surprised to see an announcement in early 2022. RJ Scaringe has stated that he wants to deliver 1 million electric vehicles in 2030. There are also some rumors that Rivian plans to invest in a battery factory, which would increase margins and decrease Rivian's reliance on battery suppliers in a time where battery cells are very hard to come by. Rivian has many executional risks. Scaling manufacturing is infinitely more difficult than building prototypes. The company relies heavily on Amazon as an investor and as a customer, and is expanding at a time in which many EV competitors are coming online. That said, I believe Rivian is positioned to succeed in the long term, given their deep cash reserve, competitive product lineup, and favorable tailwinds. To get to a price target, we'll have to make a number of assumptions given Rivian's limited historical data. As always, please do your own research before opening any position. I'm not a financial advisor, and these are just my opinions. As a base case, we will use Rivian's projection of 1 million vehicles delivered in 2030 and assume an average sale price of $50,000 per vehicle. Assuming net margins are at a healthy 15%, we get an EBITDA of $7.5 billion in 2030. If we assign a multiple of 25x due to the quickly growing EV industry, we get a 2030 valuation of $187 billion. At a 10% discount rate, we get a 1-year price target of around $94. In a bull case, increased vehicle sales of 1.2 million in 2030, an increased average vehicle sale price of $60,000, a much more aggressive multiple of 35x, and increased margins of 17% due to expanding software and charging infrastructure revenue would give us a fair value 1-year price target of $180. Rivian has garnered a huge valuation very early in its life cycle. Under conservative estimates, I do not see much more room for stock price appreciation. That said, Rivian has all the tools to succeed as a company and may very well beat expectations, quickly expanding its manufacturing capacity, driving down margins, and expanding into other business sectors will be key to justifying the bull price. As such, I see Rivian as a long-term hold for those who believe that Rivian can scale manufacturing with excellent efficiency. I plan on waiting until Rivian stock forms a post-IPO bottom before considering an investment. If you'd like me to cover a stock you're interested in, leave a comment below. If you're interested in watching future videos on investing in the stock, crypto, and real estate markets, subscribe. But most of all, thank you for your time, thank you for watching, and invest safe.